Turkey's central bank has published its second inflation report for the year. Inflation currently stands at around 20% after hitting a 15-year high of more than 25% in October. The bank has left its outlook for 2019 unchanged and has reported a partial recovery in economic activity in the first quarter. The Central Bank of Turkey has kept its inflation forecasts at 14.6% for the year. It expects that number to drop to 5.4% by 2021. At the same time, the bank has raised its food inflation forecast from 13 to 16% this year. Turkey's foreign trade deficit has fallen 67.4% year on year to $6.8 billion in the first quarter. Exports are up nearly 3%, while imports are down more than 20%. Well, according to the country's statistical authority, economic confidence has been rising. Turkstat says the economic confidence index has grown by 3.4% on a monthly basis in April, mainly due to gains in the consumer and real sectors. Well, the governor of the central bank, Murat Cendikaya, says another round of monetary tightening is possible should any upside risks to inflation materialize.
If the inflation curve deflates from our forecasts, then we want to get it back on the right track. The central bank would use all the tools at its disposal to achieve its targets.
Let's get more on Turkey's economy now with Taha Arvas, who's here in the studio. He's a financial columnist at the Daily Sabah newspaper. Welcome back, Taha. Let's look at the inflation figures first. So the central bank has kept its outlook for the year, even though it's saying that food prices might rise. Does that make sense to you?
I think that central banks do two things. They put out data that they believe is actually going to happen, and they're also it's kind of inspirational, or they try to move the markets in the way they would like them to move. So this is what they're hoping for, and this is what they also plan for. But there are times when central banks miss the mark as far as inflation predictions, and this might be one of those times, but it might not be. We'll see.
One of the more revealing things, which I think many analysts were looking out for, is, I guess, any hint that the central bank was looking to raise or lower interest rates. And what the central bank governor did say was that it would consider further policy tightening if it needed to.
Right.
Does that point to a possible rise in the future, which some people have been asking for?
Well, there are unofficial increases in interest rates in the marketplace, so higher than the central bank has come out with. So in that respect, the interest rate is above what the central bank currently is talking about. Will they come out with an increase? Perhaps. And the reason why is if you look at emerging markets in the last 2 weeks, you see that countries like South Korea, South Africa, Indonesia, across the board, Hungary, all of their currencies are down over 2% in the last 2 weeks. Turkey is one of these countries. Brazil is also another one of these countries. So all of these emerging markets have to take steps if they plan on holding their currencies ground, especially if they don't have energy like Turkey. I mean, the prices of oil has increased recently, and if that continues to go on, then Turkey will be hard-pressed not to do what you're talking about.
And we're seeing some positive signs as well. So obviously inflation is continuing to drop, which is a good sign, particularly for the Turkish consumer. But we're also seeing an uptick in economic confidence, as we mentioned there as well.
Right.
So overall then, what's your outlook for the Turkish economy going forward into the year?
And Turkey has had a very turbulent year in the last year and just came off of a recent election, which kind of confirmed the government's stance that, listen, democracy has taken its course. Sometimes the current ruling party wins, sometimes it loses, and things continue and markets proceed. I think these are all positive steps for Turkey, and I think many people were waiting for, after the turbulent summer that we had last year, for the other shoe to drop, so to speak, for another spike in the Turkish lira's currency exchange rate with the US dollar. That didn't happen, and because of that, I think people have more confidence now in the lira and where it's going in the future, and that should bode well for the economy.
And the lira we're seeing now is sort of holding around the 5.9 to the US dollar mark. Is that the new normal, do you think?
I think it is, and I think perhaps it needs to be, only because for rebalancing to happen, the currency, there are ways to artificially appreciate your currency. And I think the central bank did many of those steps in the last few months. That's good until a point, but if you want a rebalancing of the economy, if you want exports to pick up, if you want imports to decrease or have local competitors come out with alternatives to these, you have to let the currency breathe a little. Has it done that? It appears to have. Is there more room to go? That's anyone's guess. But unless that happens, unless there's a free flow of the currency, you're going to have problems. You're only going to delay problems.
Okay, Taha, thanks again for unpacking that for us.
Thank you.